Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Ramana Korada. Thanks for being on the show, Ramana.
Thank you, Whitney. Thank you for the great show. I'm glad to be part of the show.
Yeah, we're grateful to have you on, especially with your experience. I know you'll be able to add tons of value to myself and the listeners. And so appreciate your time. I'm grateful for that, Ramana. But a little about Ramana is a co-founder and managing partner of Raven Multifamily, which acquires B and C class multifamily assets in landlord-friendly and growth markets. His company has syndicated 2,700 units in 3 different markets in the last 3.5 years. He's passionate about adding value to investors as well as tenants. So, Ramana, thank you again for being on the show. Tell the listeners a little more about, maybe your background and how you got into this syndication business.
Absolutely. Thank you for the opportunity again here. So, folks, my name is Ramana Korada. I live in Frisco, Texas, which is part of Metro DFW. I'm an immigrant to this country. I came here in 2001 for my master's. As everybody else, I finished my master's, started looking for a job. I found a job. I was roaming across the country with my job, but I always have this passion to do something else other than my job. So I was exploring different opportunities in multiple areas, not knowing anything, not formally educated in any other than my day job. I never stopped my thirst to exploring, right? So I started partnering with few of my friends, started investing in retail strip centers. So I found 2 of them, I partnered, and I wanted to replicate in the hometown of me, which is Dallas. So I was able to get many people interested in the business model. But by the time, guys, it's ready to send your funds, but nobody was doing that. So that gave me a pause, and thinking in the retrospectively, what I realized is these folks do not have any formal education. I mean, they are believing in me, but they are not able to make a decision if that's a good investment for them or not. So that pushed me into finding a right mentor where my job is not to educate people, but rather I wanted to make the investment successful. So until then, my focus was on retail strip centers. But after I found this mentor in Dallas, I felt like multifamily is the way to go. Okay, because end of the day, everybody has to live under a roof. And the class of the property that my focus area is B and C, where that C being the lowest in the class. Of course, that's where the value add comes into picture. But by targeting that C class properties, I was able to pull most of the sophisticated and accredited investors into these deals. So this is where I learned the multifamily knowledge base, and I networked with so many folks with a similar mindset. I started investing passively and quickly learned how to syndicate. And I found my partner, Venkat Avasarala, in the same mentoring group. We started working together, and we started with a 100-unit property in Oklahoma City, moved on to 120-unit in Glendale, Arizona. That gave us enough, enough credibility in the market, and we picked up a 300-unit property in DFW market. Since then, we've been purchasing in DFW. So we finished our 11 syndications with 2,700 units. We sold
11th
11th
yes. Syndication?
That is correct.
Awesome.
Thank you. So we exited from 3 deals out of these 11. So we are actively managing the 8 properties. We don't self-manage. We are working with third-party property professionally managed companies in DFW market. and looking forward to get to our 10,000 unit mark, in the next few years. Part of this process, I worked in IT for 15 years. And after having few properties, it's kind of overwhelming with investor relations, with property management, with all the 9 yards with the property management, right? So with that, myself and my partner, we quit our 15-year career IT jobs, and we are doing this full time.
Nice. Well, I appreciate you elaborating on that. I know lots of people that are listening are looking to do the same thing, and you all have accomplished a lot. I mean, 11 syndications. That's a great. It's a great experience, and I know you all have learned a lot. So, tell me, why don't we talk about a recent acquisition, and let's kind of dive into that deal a little bit.
Absolutely. So, my apologies for not able to make up my scheduled time with you. Because this property taught us a whole lot than anybody would think. So in the first 10 deals, myself or my partner, we never struggled to raise money. Even in the last 3 deals, we were able to raise like $9 million in 24 to 48 hours. I mean, not everybody deposited their money into LLC's account, but we were able to get full commitment within no time. But something changed in the market. So, if I think back, what I could realize is definitely the recession talk is more than it was, a few months back. And multifamily is still the hottest market. So price per pound is definitely killing. And there are a lot more syndicators in the market right now than a couple of years ago. So lot of availability of these opportunities. Of course, investors have to make their complete due diligence before committing to their funds. They have to underwrite, they have to vet the syndicator, they have to vet the submarket, they have to vet the market, they have to look at the underwriting, how well these syndicators are doing. All these factors into, before investing in anybody's deal. Even though our underwriting is very conservative, very investor friendly, still we were not able to pick up the $8.2 million raise, not easily. So it took good 3 weeks this time. Definitely, price per pound is one of the key factors that we have to keep in mind. So before purchasing or getting into contract, that will be my criteria for sure. On this particular deal, this is a 280 unit Arlington property. It is 1970s built. Seller, whom I know, we know before, they manage around 5,000 units across Texas and Colorado markets. Very sophisticated seller. They spent around $4 million in that 280 unit property. They took care of pretty much entire exterior renovations, and also they upgraded 48% of the interiors as well. And they showed us the good path to increase the rents. So it was, no-brainer to win this deal. I mean, basically, this was an off-market property that one of the prominent broker got to us from Dallas market. And same shop provided good 80% LTV loan on the property. That helped us, real big time. Finding a right lending partner is key to success in this business as well. See, end of the day, the more proceeds that we get from the loan will help lesser equity raise, which will produce much higher, much better result to investors.
Okay. I'm going to stop you for a minute because there's a lot of things there we can talk about that I want to ask you about. And I want to say, like, congratulations though to you all to be able to raise, $9 million in just a couple of weeks. Normal, before even, but I know you said this time you struggled, but you still got it done in 3 weeks. I mean, that's still, most people listening would still be, jumping up and down to be able to raise that kind of capital, even in 6 weeks, and so you all are obviously doing something right. And so, but tell me, I know you elaborated a little bit on just how the market's changed and maybe why, it was a little more difficult to raise the capital because these investors have so many more opportunities to look at now. But what was it that really helped close that gap for you all? After a couple of weeks, you all noticed that, okay, it's going to be, it's a little more difficult now to raise the capital than we expected. What was it that pushed you to reach your capital raise goal at that time?
So basically, we didn't reach out all the people in the first place. So, obviously we reached out and we made a few phone calls with the past investors. So they came forward and invested with us. And also, to keep the underwriting very attractive, conservative for the investors, right? We didn't include a lot of other income opportunities in the underwriting in the first place. Okay, some of the investors were asking, "Hey, how come you didn't add any?" It could be washer dryer income, it could be tax savings that City of Arlington is reducing, and we can implement covered parking, reserved parking. We can get cable internet contract to the property. I didn't include all these in the initial underwriting. So when I added all that stuff, it definitely showed much higher, much better result for the investors, or investor returns for the investor. So that helped pull that gap very quickly. Wanted to keep it as much conservative as possible. Still, I don't want to, false promise, right? End of the day, once investors likes your business model, see the things that we do, we have a very clear communication with our investors. Okay, we don't false promise. If something is not being right in the property, that's what we communicate. Okay, we don't oversell to any investors. Hey, if you're interested, please invest. If not, let's move on. We'll share our next opportunity with you. You can join. No selling, clear communication, clear expectations. In our webinars, we make sure that we communicate, okay, this is how the communication is going to be, and we try to be in the same schedule. So, and also we had pretty good success with the sales of, or the exiting of 3 properties, right? So that helped us, secure our 2,700 portfolio in 3.5 years.
Wow. No, you also said numerous things there that we should probably elaborate on a little bit, but for the sake of time, I'd like to know a little more about this deal. I know, and you had elaborated 280 units in Arlington, 1970s build, and who the seller was a little bit. They had already upgraded 48% of the units, and that it was an off-market deal that a broker brought to you. Tell me, right now, I know everyone is struggling with finding the deal, right? Quote, the deal, the next deal. We're seeing lots of properties, but they seem to be so overpriced. What was it about you all, or the relationship, or the connection, or that allowed you access to this off-market deal?
So basically, end of the day, brokers has to represent sellers. Okay, you can have as much as a relation you can have with the brokers, but you have to give a warm and fuzzy feeling that you are the closer, one way or other. We go into these contracts with the mindset of 60 days to close. Okay, luckily or fortunately, or the way how we perform, for me and my partner, we always, most of the deals we closed at least a few days before the 60-day mark. So we have that reputation in the market that we are the closers, and we are, we can close early too. And on this particular deal, we closed this deal how many days? A week before. Okay, even though we struggled to raise money, we were able to close a week before. Okay, so why I'm saying that is, obviously you have to impress the broker with your due diligence before setting up the tour. Okay, you make sure you read the OM, you understand the market, you understand the submarket, you understand the property. You, if needed, go and visit the property multiple times. Feel comfortable, so that if you are prepared, well prepared before the setting up the tour, broker will get impressed upon you, and he will see the urge in you that you want to win the deal. Now, you have to give the comfort that, you can raise the money if you are a syndicator, or if you have your own funds, that's well and good, right? So as soon as the broker feels comfortable that you are a closer and you have a resume that shows that you are a closer, then definitely brokers will come after you. Of course, like I said, brokers have to represent the seller. There are a lot of syndicators and institutional partners are looking to park their money in this multifamily asset class. So you have to compete with with lot many folks than you would think. Okay.
I would also add that, not only are you impressing the broker, or you're increasing that relationship, but you're also buying from a seller that you said had 5,000 units, and
That is correct.
they're going to have more units to sell over time, right? And so
Absolutely.
you're building that relationship and showing them how you're performing, and how you performed in the past is going to go a long ways when they have another property for sale that possibly you get to submit an LOI on, or make an offer on.
Just to add one more point, seller gave us $25,000 credit for early close.
Nice.
Yep.
That's awesome.
That's a little bonus for my investors.
Yeah, that's really neat. And you started talking a minute ago about the lending partner. You said 80% loan, and you were talking about the importance of the lending partner. And I wanted to get back to that and allow you to elaborate on just the importance of a lending partner. The loan and the loan type is crucial. So, go ahead and elaborate on that as well.
Absolutely. I think I'm okay to disclose the broker and lending partner on this deal because we closed it, and they are going to publish on their website also pretty soon. So, this broker is from JLL. It's a worldwide company. They have Fannie Freddie DUS lender as well. So this guy provided initial quote, this JLL lending broker, as soon as this opportunity came in. I worked with other DUS lenders like Arbor, Walker Dunlop, Northmark, all these big Wells Fargo, all these big lenders, right? I haven't worked with JLL lending side before. I had been interacting with this guy for a while, but never got an opportunity. You always have the doubt until rate lock is done. You're not sure he's going to perform, because he's the one bringing 80% equity to the table, and we are just bringing only 20%. So, I want to make sure that he performs, even though something has to happen. So obviously, insurance in Dallas market, insurance is going up and up every single day with the, weather-related stuff. The taxes are going up. If you are buying a property in summer months, obviously you can see the trending of income going up as as the school starting and the weather gets changing. Obviously, the collections would drop, and it will affect the proceeds. So you need to have a lending partner who can work with you even in the downside of collections or whatnot in that property. So it's like during this contract time, if not every day, me and my partner are in touch with this lending guy pretty much every single day. If there is any changes that he's anticipating, or how his credit is liking the deal. Obviously we had to put $1 million in the capex account with Fannie Mae, but at the end he delivered, and it was a big success for the sponsors and the investors on this deal.
Nice. Okay, Ramana. Well, before we run out of time, I want to ask you, some other questions just about, the syndication business and get your perspective. But now that you've done, 11 syndications, you all have gained some great experience, but what's something now that you wish you had known, maybe while you were doing that first deal?
A lot of learning, right? If I talk about the very first deal, that was in Oklahoma City. So the moment we purchased the property, the oil wasn't in the declining phase. So definitely we got big hit in that market. So when oil was doing really good, oil and gas, obviously, a lot of new construction started. But right after we purchased this property, that new construction hit the market, in that Norman submarket, like really big time. So university housing came into market, new construction came into market, and oil, gas went so down. Normal market, it was a disaster for the first 1.5 year. But then quickly, we weren't getting right support from our management company as well. So they had to change like 3 or 4 managers in the property. Finally, we found the right one. Same time, market shifted a little bit in our favor, and we quickly wanted to sell. So we worked out with a Dallas broker to see if he can sell the property. But luckily he found, and we exited the property with a decent profit. That property being very first one, we definitely don't want to put a sore syrup in our investors mouth.
Sure.
So
I wanted you to elaborate though on like what's been the hardest part of this process, and unfortunately we're about out of time. But what's been the hardest part of this syndication process for you?
So finding the right deal, like earlier you mentioned, right? There are a lot of deals available in the market, but finding that right one is really difficult. I have to scour through at least 100 deals to find one. Okay. You have to be creative sometimes to see the opportunity in each and every deal. No property management company, no owner will leave the rents to a very low level if you compare with the submarket, right? So you have to make sure you are getting into the right deal. For example, if you look at Atlanta market, right, most of the deals that you see are with a 1,200, 1,300 square feet a unit. If you look at in Dallas, the average square footage is around 800 to 900. If you look at in Phoenix, most of the product that is available with a lot of efficiencies, it's like 400 to 500 to 600 square feet. Not that Dallas and Atlanta doesn't have these smaller square footage units, but majority of them, right? So make sure you're comparing apples to apples in the market. You have to see complete upside with every single deal, things like that.
And tell me a way that you all have recently improved your business that we could apply to ours.
Recent improvement. Obviously, I think the broker relations. With one broker, we bought like 5 properties, and the 6th one, about to get into contract. So definitely, with our success, this broker, definitely helped us in a big way. He felt comfortable with the way how we operate. We try not to stress out the broker. We anticipate much earlier with any activity, and we provide a solution to the process, so that he doesn't need to stretch out a lot. Even with investors, over this period, we built a couple of thousand investors. So definitely, we present the opportunity in the right way, so that they don't have to scratch their head to find out what is in the opportunity that is missing, or if we are oversaying something. So things like that are helping really well in our process. Sure. So with our 11 properties, we are expanding our team. We hired a couple of folks, to help us. So we want to improve our, investor communication, things like that. And we're in the plan of hiring one more person.
Nice. So, all right. And tell us how you like to give back.
So, different ways, right? To give back to the community, either you have to provide your time or the resources that you have, especially in the multifamily industry. If anybody needs help, I'm just a phone call away, or an email away, or text messages away. For the community, as I'm so busy with my multifamily acquisitions and management, I try to help different organizations with the funds that I can where I can provide some difference.
Great. Well, I appreciate your time today, and tell the listeners how they can get in touch with you, Ramana.
Absolutely. So I am in Facebook, myself, my partner, and our Raven Multifamily, in LinkedIn as well. We have our website ravenmf.com, ravenmf.com. I can be reached at Ramana at ravenmultifamily.com, RAMANA at ravenmultifamily.com, or you can text me or call me at 214-799-9127.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.